The Reserve Bank is widely expected to raise interest rates today to 3.6%, the highest level since June 2012. It will be the 10th rate increase since May last year. Let's bring you some analysis with our business reporter, Edward Boyd. Ed, it seems to be pretty locked in, this rate rise today, but the question we all want to know the answer to is just how much higher are the experts saying rates could go?
Well, Ash, the experts are saying rates could reach above 4.1%. So Westpac's Bill Evans, he thinks rates will get to 4.1% over the next couple of months. Commonwealth Bank think 3.85% is where interest rates will peak. But then there's other experts out there that think rates could get up to 4.4%, perhaps even a touch higher than that. So we're not at the end of this rate increase cycle just yet. Remember, the Reserve Bank started lifting rates in May last year, and today we're expecting that 10th rate increase from the RBA. We're expecting 25 basis points today. So what that means for a $500,000 mortgage is roughly $77 extra per month in repayments. But it's the cumulative impact of those 10 rate increases costing roughly $1,000 in additional repayments on a $500,000 loan since rates began rising in May last year. And obviously those numbers are doubled for a $1 million loan. There's a lot of people out there with very large mortgages in Australia. So this is a very significant announcement today from the Reserve Bank. We know they're not done yet. It's going to be happening at 2:30 this afternoon, and I'm here to bring you all the live analysis, Ash.
We would expect nothing less, Ed. We always do look, of course, at the Governor's statement. This afternoon, what are we expecting? I understand it could include some commentary about inflation, and also more broadly, it's likely to look at Australia's slowing economic growth.
Yes, so since February's board meeting last month, there's been a couple of big economic data drops. Number one has been the GDP numbers, which we saw last week, so the December quarter economic growth figures. And economic growth was actually a bit slower than expected. And one of the things we saw in those numbers was a big decline in the household savings ratio. It actually fell to its lowest level since 2017. So a lot of Australians in that December quarter started spending money of their own savings on things like mortgages. So expect some sort of reaction from the Governor around Australia's economic growth starting to slow down. It's a sign that interest rates are having an impact on the economy. But the other thing as well was the monthly inflation indicator. That came out last week. Now, it's not a super accurate reading of inflation in our economy. It only measures 60 to 70% of the consumer price index basket of goods. But it said inflation was 8.4% in December, and it fell to 7.4% in January. So a big 1 whole percentage point decrease in inflation over the course of a month. So expect some sort of reaction as well from Governor Phil Lowe around those figures. So we'll get the statement from him this afternoon, and then he's actually speaking tomorrow. It's his first public address to kick off the year, and he'll be taking Q&A from media as well. So it'll be his first Q&A session of 2023. So pretty looking forward to that too.
Yeah, we'll be hanging on every word. Ed Boyd, thank you.